obligation when you sign that document that you will pay principal and interest. And you will also adhere to all of the obligations that are in that mortgage document. So what the bank is expecting is that you will pay on time. And when you cannot pay, that's when you should seek your loan officer to at least provide some explanation and some sort of arrangement. So most lenders in the Bahamas require contribution of 5 to 20%. So those in the class who are actually in the business of granting loans, if you want to make a contribution towards your company, or you want to explain your experience in terms of obtaining a mortgage, feel free to chime in at any time. So most banks require contribution between 5 to 20% of the cost of the residential property. And the percentage contribution depends upon the lending institution. Now we know that each institution itself has its own required amount for a deposit, and it has its own interest rate. And the interest rates are competitive. I think Scotia was the first one that started with the 3% mortgage, depending on the client. So it is usually a cash contribution, but some people offer up real estate, either owned by the borrower, or it could be a pledge, or sometimes it's a guarantee. The deposit required for a mortgage loan for the purchase of a commercial property is always a little bit higher, 25 to 30% of the cost of the property being purchased. I don't know if anybody else have or aware of a lower amount, or is that still the going percentage for down payment for commercial properties? Anyone? It's still that amount? 25 to 30%?
Yes, ma'am.
Okay, so the mortgage offered to the borrower is a prime rate mortgage, and the interest is fixed at a certain rate throughout the term of the mortgage, and with a fixed monthly loan amount paid to the lender, inclusive of principal and interest. Interest rates on mortgage loans are tied to the prime rate, which is set by the central bank. The prime rate may vary according to the performance of the economy, the inflation rate, government fiscal policy, and monetary policy of the central bank. If you look on the next page, we give you a history of the prime rate in the Bahamas. As you can see, it moved from 7.25 and it's down to 4.25% now. So as you can see, a lot of mortgage rates are below prime rate, and that's because of the liquidity in the system. So a borrower's effective interest rate on a mortgage would be prime plus a percentage point. And that depends on the borrower and the borrower's credit rating. So residential mortgage loans tend to attract lower interest rates than investments or commercial mortgages. Every lender has a schedule outlining their various mortgage loan products with corresponding interest rates for each. So I went to Fidelity and I put in a mortgage amount of $200,000 at an interest rate of 4.5% for a term of 20 years and a down payment of 10%. And based on their mortgage calculator, my monthly payments would be $1,138.77. And that is made up of interest of $675 and principal, and principal is, I think it was 5 something. The total interest for the duration of the mortgage was $93,304.53. And the total repayment overall on that $200,000 mortgage for 20 years, the total amount repayment is $273,304.13. So you could see that it is a long-term investment and it does cost a lot of money. Any comments?
No, tracking so far.
So how is the interest calculated? Like, I know, obviously it's not the percentage of, let's say you said 4.5%.
Yeah, that's what I put in. Yeah, that's what I put in the multiplier.
So it's not that 4.5 or 4.5% of the 200,000, because that wouldn't add up to 70-something thousand dollars of interest. Is it something else in that? How was that calculated?
Oh, it's a formula. I don't have the formula. I could find out what the formula is. Anyone knows the formula out of their head? Anyone knows? Kenneth, do you know?
No, ma'am. Kwame would probably be better for you.
Okay, he's on. Oh, yeah. Yeah, he's on. Kwame, do you know the multiplier for the mortgage?
I haven't done that for so long, ma'am. I cannot remember that. I honestly can't remember. It's been a while since I did that. So
yeah, I haven't
help you that.
For like maybe 6 years. I really don't remember. But we could find out for him.
Yeah, I remember. I remember it's basically the same thing as they used to teach you in school. It's still I equal PRT over time, but then I think it still has something to do with the 365 days calculated in that also, because that's where you get your daily per diem from. To say that, hey, like, yeah, you have your daily per diem at maybe $4 and some cents a day in interest to calculate over for the year. So I is a breakdown that I just can't remember how to do it right now. I apologize.
Yeah. Terrell, we could figure it out for you and let you know. Send you an email.
All right, thank you.
Yeah, since you want to figure that out. So every bank itself has its own requirements. I mean, they're all practically the same. So if you look at RBC say for residents, you could obtain a mortgage for the purpose of purchasing an owner-occupied residential property, including a townhouse and a condominium. Financing is up to 90%. So that means you make a 10% down payment. Mortgage indemnity insurance is also available for amounts in excess of 80%. The amortized monthly payments of principal and interest can be granted for up to 30 years. So remember, I did mine for 20 years, but you can actually get your mortgage for 30 years, which is very long. And I think they don't go over the age of 60. Correct me if I'm wrong. And I think they don't like to go to 65 because from 60, people can go into retirement.
Yeah, that is correct. 65 would be the maximum that they would do, and that would only be on an exception basis.
Right. So if you want to get a mortgage, Terrell, you're looking at 30 years, 25 or 20 years. I would never recommend 30 years. It's too long. Much too long.
At 30 years, you'd pay more than 3 times what you borrow.
Yes. So that's why the calculator on each one of these banks, they have a mortgage calculator. You can put in the amount. I think some of them actually can tell you how much you can qualify for. And then you can put in the mortgage, the amount, the principal, and then see what the payments look like. And that's why you see a lot of people are opting now to try to bill as much as they can out of their pocket.
Excuse me. So just a question. So the shorter the mortgage term, the less interest paid? as a rule of thumb, or?
The shorter any loan.
Yeah, it will be
the less
less.
interest.
Okay.
Mhm.
And the premiums are going to be higher though.
Yeah, you'll pay more, much more.
More per month?
Yeah.
Yeah,
you're
more
paying-
per month, but you
you're
would
paying
save
off
at the
the-
end of the
For all
day?
you,
Yeah,
yes.
you save at the end of the day, yes.
Okay, thank you.
Mhm. So that's what you have the, and I think a lot of people, they think that, okay, I'm applying for a mortgage, I get the funds, and then they're good to go. But that duration, that 20 to 25 to 30 years is very long. All kind of things can happen in that time, including actually starting a family, kids going to school, members getting sick, other family members getting sick. And then on top of that, people getting older.
Don't forget the biggest one that we all experienced in the past 2 years, coronavirus, and your job places are closing down and laying you off.
Yes. Mm-hmm. And now you have a pending war, which can impact prices, a lot of things.
And after missing 3 months, I know you mentioned it earlier, you're basically subjected to maybe losing your whole home.
Yes.
3 months?
Yes.
25 years or 20 years?
Yes.
Wow. That's
3 consecutive payments.
wow.
Oh, is that by law or is that
Yes.
oh, by law? Okay, so it's not based on the bank.
No.
Okay.
But
the bank do have a provision in place whereby they will try to work with you, but that can only go on for so long.
Right.
So that's why. Go ahead. Go ahead.
On that note, you got to be mindful that when you're looking at after 3 months, you getting in problems with your mortgage or whatever the situation is. Take for instance, you end up let's say 6 months in arrears. By the time it's you 6 months in arrears and you're unable to catch back up, or at least unable to make catch up on the payments, and then they have to restructure the account or renegotiate the mortgage to try to push it. Remember a lot of those case studies that we have, what happens when they renegotiate? It often puts you in a bind where at the end of the day, you end up spending more than less. I mean, more and hurting yourself over a longer period of time. So you got to look at that also. So the best thing to do is to try, and then a lot of people try to hold on to something so tight, and because this is their investment at this point in time, and not realizing that sometimes it's best to just let it go. Wise you can, because if you take too long to let it go, you end up in a deficit. So,
right.
So you got to look at all these things when it come into play into that.
Terrell, you had a comment you were going to make?
I was basically going to speak about this whole, when you mentioned the whole pandemic thing, some people have been in limbo for like a year and a half when it came to their mortgages. So basically, obviously it pushed them back a few years, I would assume, when it came to for their payments. So how would it work for people who would have already, I guess, it would lead to them passing like the retirement age?
Yeah, but the bank in most of those instances prior to the pandemic, the bank would have already sought, depends on where they are, they would have already sought vacant possession. So now all the bank is going to do now is just effect their order.
Oh, wow.
They're gonna move ahead, yeah.
Okay.
So unless you got a windfall whereby someone died and left some life insurance and you now willing to make an offer to buy it back, I mean, what are you going to do?
And also the Homeowners Protection Act also allows and provides you that option in order to do it. So as long as the facility is still in the bank's possession, you should still be able to go in and and,
Yes.
and make a claim or bid on it. Or say
Mhm.
that, hey, look, yeah, you want it, you have the money for it now, you should still be able to do it.
Right.
So you got to be mindful. You still have some options in connection with it. And like I said, the Homeowners Protection Act actually protects the client or the mortgager more than the mortgagee. You understand? So you just got to be mindful and careful, and just continue to read when it comes to certain things in connection with that. But as Ms. Archer was saying, you have that 3 month window in which the bank can automatically go to court proceedings. But usually they would decide to work with the individuals.
Yeah.
So because bank want take the house because they lend you the money. They want the money. They want their money back. They don't want the house back because at the long run, they could end up at a loss with the house.
And then the business of making money.
And not lose it. Right.
So they will work with you to a certain point. But I just want you to be mindful that once you get that mortgage, that is a commitment. That's like a burden hanging over your head. Yes, it's wonderful to have a lovely house and nice lawn and you could watch the sun rise, but it is a long commitment. And it's going to be priority number one. Because remember now, you could have a job whereby your monthly income is $4,500 a month. You're living good, you're riding good. You can put your kids in private school. Then something happens. And you drop down from making $4,500 a month to making $2,500. Or you move from $4,500 to zero. What are you going to do? And I think a lot of people, when they get a mortgage, you don't try to look at what's reasonable. What if this happens? What if that happens? How am I going to pay? Because you end up losing something that you would have been paying for the last 15 years, 18 years.
So the additional payments, let's say, I'm making additional payments towards the principal to, decrease the amount of years that I actually have to pay. Would that play a factor in, let's say, a life, something happens, I lose my job, I'm out of job for a few months, would those payments that I would have made on the principal play a factor?
What do you mean? Because you're paying on, you're making principal payments to reduce the duration of the mortgage?
Yes, that's correct.
But that's your personal commitment. What does that have to do with the contract? The contract says you must make monthly payments of X amount.
Regardless of whatever additional you put on.
Yes, that's what you're doing to try to bring it down much quicker.
Let me chime in here. The good thing about you doing that is that, take for instance, you got the mortgage down now to $50,000. Everything, and you only owe the bank $50,000. Everything they repossess, they take the house or whatever the situation is, they sell the house. The house is appraised at $110,000, $120,000. After the legal fees and the stamp tax and whatever they have to take out, your equity you should be able to get back at the end of the day.
He'll get it back. He will get it back.
Right. So you will get it back. So again, that's one thing about you making the principal payments. So you, in that case, you may not lose. You understand?
If they could sell it, for the value that he's looking for.
For the value, yes, ma'am.
Yes. That's another thing you have to look at. And how long it sits there, unoccupied. So there's a lot of factors.
In line with his question, I think one of the biggest mistakes I find customers make in wanting and trying to pay off their mortgages early is they go into the bank and say, okay, let me pay this on my principal, right? So they go into the bank and they have it placed on their principal balance instead, whereby their principal balance goes down by that amount, but it doesn't affect their actual payment for that period. Okay.
Right.
So your payment is still required at a particular time, versus doing it the other way, whereby your payment is coming through, your interest is accruing, and let's say your insurance is calculated in there as well, right? Your life insurance or your hazard insurance. Like in some banks actually include your hazard insurance and your life insurance in your payment. All it is when you've made your payment and you want to pay an additional amount to go to principal, you pay that amount, and that amount is going to basically automatically go to the principal, but it's also going to advance your account ahead by if it's a full payment, it'll advance your account ahead that full payment if the system allows it. Okay, if that banking system allows it. So if you continue to do that for 12 months, you will actually advance your account ahead 12 months. You will basically put a big chunk of that extra payment onto your principal, because your interest has already been paid off. Your accrued interest has been paid off with your regular payment. And so any additional amount that goes on the account automatically goes to principal, you know? So that's why I normally would tell some of my customers when they want to do that. I mean, I shouldn't be telling them that because it's my job for my company to make money. But from time to time, I say, hey, just make your payment. If you wanted to have the biggest impact, pay it the day after you've made your payment, or pay it close to it. That way you've only accrued 2 days of interest. You know, the problem comes in when you want to pay the principal. Oh, you pay a big 10,000 lump off, but your payment comes to each month. Then next month you lose your job. Okay.
Exactly.
So next month now you can't make your payment. Whereas if you've done it the other way, your account might have been advanced for 4 years. So you don't have to make another payment for another 4 years or until you find another job.
All right, so Mr. Gibson, what you're saying is that it's best to, like, when you're making the additional payment, it has to be basically the same amount of your monthly payments.
No. What I'm saying is once you made your monthly payment is going to take care of all the accrued interest for that period, any insurances or any other things that are calculated in there. Once that payment is paid, your accrued interest comes out, then your account starts accruing again, interest again, it starts building up again. So if you make whatever amount, even if it's $50, if you make that $50 the next day, that almost that entire $50 goes towards your principal, because your accrued interest has already been taken care of. That's what I'm saying. I'm not saying that the payment has to be the same as your regular payment. Any amount in excess would go directly to your principal.
Okay.
Things we shouldn't be talking about really as bankers.
So the timing of when you pay on it is important.
Most important.
Yes.
Okay.
One of the biggest tricks of the trade is this: if you haven't had a mortgage yet, or even if you're going for a loan, if you want to knock about a year off your mortgage, right? When your first payment is due, pay an additional payment a day after your mortgage, and watch your mortgage go down quickly.
Right. Okay.
And is this any amount after my first payment has been applied?
No, in the case that I'm talking about, in terms of trying to knock them a chunk of time off, I would normally say the regular payment or more.
Okay.
Because I know with some banks, they require you have to make at least $500 or more when you add an addition. Some banks don't allow you just to put like $200-300. At least for Scotia, they require you to put $500 or more if you're gonna be putting it towards your principal.
Yeah.
Scotia $25,000 a year.
Scotia is special.
Yeah.
Okay, so don't get dragged into that low interest rate. Read the fine print. Miss one payment and your rate will shoot up like crazy.
Yeah.
Okay, so if I went let's say the day after, like you were suggesting, and I paid my whatever amount, I would put that on a principal payment, or I would just say put it on my actual, just pay it
to the account.
Just pay to the account. Okay.
Because it's going to go to principal in any event, seeing that you don't have any accrued interest.
Right.
Anything accrued there, and you've already paid all your escrow account, which is your insurances. It's going to automatically go to your principal.
Okay. Understood.
Keeping in mind the banking system also, because all banks do not have that system. I know at RBC, if you make that big principal payment, your actual monthly payment going forward will reduce until your maturity date. You have to actually request that your payments stay the same for the duration of your loan.
Yeah.
So each bank has a different approach to the principal payment.
Yeah, true. Because some banks don't allow you to prepay your account. You have to get permission because they've already factored in over that 20-year period how much money they're going to make. So they've already allocated that in their profits.
Exactly.
And RBC actually does automatic recalculation, basically stating on what it should be until the end of the mortgage. So if you put a $10,000 on the account, even as a principal payment, then the system automatically recalculates it and say, okay, instead of you paying $500 for 20 years, you now pay $320 for 20 years to cover it. So they automatically recalculate it. That's what she's referring to when she said
it's still the 20 years at the end of the day.
At the end of the day.
But,
okay.
But you have a lower premium.
Payment.
Right.
So if you keep your payment it's up to you to keep your regular payment. So if you keep your regular payment coming in, they will automatically recalculate it again and say, okay, all right, on the 20-year period, it's now down to $200 and some a month to go over until it reaches a 20-year period in order to finish. So their system is basically automatic recalculation. So I understand what she's referring to.
Yeah, but you got to be smart. You don't fall for it. You continue paying what you used to pay. But most of us, we say, oh, we got some little extra money now we can use. So
yeah, but you could pay it off though. If you want, you could pay it down. Let's say you're putting at least $10,000 to $15,000 extra.
If they allow it, because your mortgage may not allow it.
Yeah.
Oh, somebody wouldn't. Okay.
Yeah.
Right. So you have to shop around before you obtain your mortgage. Go to each bank and see exactly, have your questions ready, and then you sit back and then you figure out which one is the one that will suit your 20 to 25 years.
Because there is a penalty for early repayment of your mortgage.
Of course.
Would certain banks allow you to waive those penalties? Like, can you negotiate the terms of your...
Depending on how close to maturity it is, they may work with you, but
But I mean at the onset, like when you're first initially taking out this loan, would you be able to like negotiate the interest rate, whether or not there's going to be an early payoff fee, that type of thing?
That depends on if you're valuable to the bank. If you're not, no.
Yeah.
See, you got to understand, the banks are in it to make money. They're in it to make money. So they expect over that 20-year period or 30-year period to make at least $200 and some $1,000. So if you can come in now and you can say, hey, look, you can pay me off early, then I got to have a penalty. It may be 5 years worth of interest, or it may be 2.5 years worth of interest, or it may be, because they expect interest on that money, and it's already been allocated and budgeted for when they lent it to you. So they will want to get something from it. So, so those are things you got to look out for. But yes, you can negotiate, at least from what I know. You cannot negotiate because those things are straightforward and in there right out, at least from time when I used to. Right.
Yeah, that's that. So unless you have more than one loan and you have collateral, and like he said, unless you're a valuable client and they don't want to lose you, there is no negotiation of penalty fees.
I have a question.
Go ahead.
The question here is, does anyone know the meaning of the word mortgage? Not the definition, the meaning.
A different meaning?
The meaning that they would what a banker would tell you what a mortgage means if you was to ask him. In actual fact, the word mortgage actually means death contract.
Yeah, I was gonna say death because that's death French.
Death contract.
Kind of.
D-A-T-H?
D-A-T-H, not depth. Death.
Oh.
Okay. Meaning that and that what that means is that the mortgage or the pledge ends or dies, either when the obligation is fulfilled or the property is taken through foreclosure, or if you die and you're insured, then your mortgage gets paid off.
Now, say you said this now, you can make poor Terrell depressed.
No, Terrell has two options. Terrell either do it the Bible way or he do it the world way. The Bible says put aside little by little until you get what you need to get what you need to get. Or you take the shortcut and pay the man his death contract.
Yeah, because that's really what it is. That hangs around your neck like an albatross. Okay, Terrell going quiet. He's doing some calculating now.
I'm sorry.
No, don't be. Hold on. Let me see. Terrell has left.
No, I'm here. I'm very.
Yeah, but you disappeared all. There he is. You're thinking it. He's thinking.
Well, I'm absorbing all of this knowledge. So when I do get to that part of obtaining a mortgage, I'm going to do it the smart way. It's not going to be, I'm going to build up my pocket. You don't have to worry about that.
Okay.
I'm going to take advantage of my youth and get it done the right way, the smart way.
If you do it that way, building out of your pocket, you'll be in the 5%. Okay. Mm-hmm. You know, they say the road to destruction is wider than many travel. So you got a 5% who build out of their pockets, then I'll go into the bank, put down the foundation, then I'll save some more money, I'll put it up to bill costs, I'll close in one room, go in, live in it, stop paying rent, take that rent money, put in and finish into place. At the end of the day, they have no mortgage.
Yeah. Mm-hmm.
But it's like fast food. We want it now.
Mm-hmm. And it is not good for you.
And then we pay the price, and then we can't fit into our clothes, and then we start complaining.
Mm-hmm. You get hypertension, you get diabetes, then you have to start paying medical bills. Yep. That's it. But at least you have the Homeowners Protection Act. It'll help you in a way. Kind of. All right. So the mortgage process. The mortgage process is, of course, you have the loan origination. And that's where you normally will go to the branch or to the loan officer. You have the loan underwriting. That's the credit underwriting. That's the back office that makes a decision whether you're going to get this loan or not. And then you have the loan administration. And of course, last but not least is the loan servicing, which is the collection unit or the recovery unit. So after that, there's a diagram. And the diagram shows you the flow between originating, underwriting, and administration, and then servicing the loan. So looking at the mortgage process, you have the application is taken. And remember, I told you can go on the various banks' website, and they all have a mortgage calculator where you can go in. They tell you what are the requirements when you wish to apply for a mortgage. They have the assessment of your application, and the assessment of your application, of course, is based on your credit score. It's one thing I would always advise clients when you're preparing your application, please do not lie to the people or try to deceive them as the amount of expenses that you have, because in the long run, the only person that's going to hurt is you. Then a decision is made whether or not it's approved or not, acceptance of approval by applicant, engagement of an attorney, the completion of the legal documents, compliance with the loan terms and conditions, booking the loan, and then at the very end is the satisfaction once the mortgage is repaid. So during the application stage, the lender normally requests certain personal and financial information from the prospective borrower in order to make an assessment of his financial viability to qualify for a mortgage loan. So that personal information would be your address, how many children you have, your residence, whether you're renting or you already have a home that you own, your age. You look at your employment history, how long you've been there, years of service, the type of employment, whether you're part-time, full-time, self-employed. Look at your salary. Then you look at your credit and your debit history. Now, the credit history, we know that we have a credit bureau. Is everyone familiar with the credit bureau and the credit bureau legislation? Kenneth,
No.
are you using information from the credit bureau?
No, we're not yet.
Oh man, not yet.
No.
I wasn't aware that they were up and running as yet.
They are collating information.
Okay.
Yeah. But I mean, you should try to get familiar and let your clients become familiar as to what is required in terms of the information that will be coming from the credit bureau.
Well, my clients are scared of the credit bureau because most of them ain't gonna be able to qualify for mortgage anymore.
Well, the credit bureau, the last time they reported was the mid of last year, and they said that most of the information was already in the bureau. Now, don't forget now, Bahamians have had quite a number of years to get their affairs in order. Why you laugh?
I gotta laugh because all they're doing is borrowing.
Well, they've had many years to get their affairs in order. And if I recall, it would have been 4, 7, maybe 8 years. Isn't it about 8 years, 7 to 8 years? When the central bank advised that a credit bureau was coming and that people should get their affairs in order.
Yes, ma'am, but be
Yes,
mindful.
ma'am.
You had COVID, and you had because that's been the excuse now. You got
Fine.
the
COVID is the excuse for everything now.
No, I'm not talking about no COVID. Nothing to do with COVID at all.
Okay, what about Hurricane Dorian and her?
That would only affect the people in Abaco and Grand Bahama.
That affect Nassau too, because I got people who say their house and then their roof and then get damaged from hurricane too. So you know, it affected all of them apparently.
Really? No, I don't think so. I don't think so. Yeah, but the thing about it is this. Bahamians borrow not just in the Bahamas, they borrow from in other jurisdictions. And there's pressure on the Bahamas to actually have this finished. They really need a credit rating agency in order for Bahamians to borrow outside the country. So it's not just for internal credit, but also for external credit. So who could have credit and who could be a credit information provider? Where's this information coming from to feed into the credit bureau? Anybody knows?
Well, I guess it'll be the financial institutions, the insurances or the insurance companies, the credit unions. I guess yeah. So I guess it's anybody who has at the end of the day that maybe even the car companies could also inject in there like easy loans and
the furniture companies.
Yes, ma'am. So I guess the information is coming from all these places.
Yes, the mortgage co-op, all of those. BPL, water and sewage. So that's why you have to put your affairs in order.
Excuse me, while we on the topic of credit, just for example, persons who have never had a loan and they want to be accepted for a mortgage loan, how would the bank handle those persons? What would they accept as a credit? from that person who has never have a loan history for them to go off of?
Well, credit, I can, from what I remember now, credit, I think at the end of the day can be accepted from, I guess, credit cards, small loans. I mean, small loans if you had them. If not, you know, they would ask you to say, they would actually shun you for the majority of part, because you don't have any history with anybody for you to verify that, hey, look, yeah, you will be able to meet the debt, or that you have the responsibility to deal with it. So
What about saving accounts? No.
well, savings isn't actually credit. That's actually your savings.
Mm.
So,
I think-
so
Oh, sorry.
like when I was doing loans, or when I did loans, and we had issues with persons who was who didn't have history like you. Take for instance, you know, I was at Commonwealth Bank for a while. The situation there is, if you come into Commonwealth Bank and I was there at that point, I would literally tell you, okay, you wouldn't be able to get what you're requesting at this time. However, let me start you off with a small loan. You understand? Or at least a small credit facility, maybe $1,500 over a year, and see how you manage that. You understand? So you would be able to build credit, because credit at the end of the day, persons need to know and need to see how you deal with things.
Right.
Okay, so you'd let them you'd let them sign up for like a credit card or something of that sort. Okay.
Yeah, you could do credit card, or you could do a small cash secured loan, $1,500, whereas they secure it with your money, or whatever the situation is, give you a interest rate of maybe, like how it was 16 or 16.75% back then. If it's cash secured, it'd be like 9 point something percent, because they basically holding your money against the mortgage. I mean, against the loan. So you understand, and see how you deal with that for a year's period. The good thing with that is, at the end of that year, you still have your $1,500, and you would have already built up your credit history, plus the interest would have been on it for $1,500. Now, mind you, the interest wasn't nothing much, but you know, it still worked out, whereas you could now try to do something for yourself on a larger scale.
Right.
Right. Because I could give you an example in Canada. My son is in Canada. So the first thing when he opened his bank account, they gave him a credit card. And that credit card, of course, you know, everything is tied to the credit bureau. So he said now, in order to get his credit rating up to a point whereby when it's time for him to apply for a mortgage or any substantial loan, he had to get another loan in addition to that credit card. So which meant that he had to go and get his car on credit. If he makes one payment late, his credit rating drops. And it takes him almost 4 months to bring it back up, because they're looking for that consistency in paying your bills on time. You have to pay it on time. I don't know how culturally we're going to get around this.
But that can also, your credit can also be negatively affected if you pay it early.
Yes.
So why is this something that we want? It just seems like trying to reinforce a culture of borrowing for the purpose of consumerism and capitalism. And it's not really to see whether or not you actually have money, because I could have tons of money in my bank account. However, it's whether or not I took out a loan of some sort or a debt and was able to pay it on the date I agreed to pay it on.
Yeah, but
I totally agree.
But not to see whether or not you have money, you know, it's whether or not you can pay on time.
Right. If I have money, I can pay on time. But this seems like something that benefits. I mean, obviously it benefits the institutions, but I think we become so gung-ho for things that just don't really make sense for us.
It's
like
a
world.
Gabrielle, it's a trap.
Go ahead.
Don't fall for it. It's a trap.
Well, we don't really have a choice, because like they said, it's a money-making industry.
Yes.
We want their money, we have to play by the rules, by their rules.
So somebody mentioned insurance. That's also a means of assessing whether or not we.
Yes.
Okay.
Be mindful, insurance company also lend cash. lend money,
Mortgages.
lend loans.
So it's in terms of a loan, not in terms of a
any service that they provide.
Okay.
Hi, Ms. Acha.
Yes.
Okay, so for instance, let's say like if I wanted to get a mortgage, right? But I wanted to go through my insurance company. How does that work? Because I know I've heard persons that they've done that before. How exactly does the process work?
That's the same process.
Same process.
The only difference, I think, at the end of the day is maybe a down payment or whatnot, but they would lend you the money to purchase the house the same way. They do a chattel mortgage. They do a mortgage. A chattel mortgage is over other things. But I think that they do a mortgage, and then you go from there. It's the same thing.
Same process.
Who does the mortgage? The bank or the insurance company?
The insurance company.
Okay, and then the insurance company would just lend me the money.
Yep.
Yes.
So, same thing. There are also private companies that loan mortgages as well. Because you have places like Kelly Lumber, who has a number of mortgages on the island. You have different companies that does mortgages as well. But we just don't hear about it because we're not in that clique.
Right. Those are the private clubs.
Okay.
Okay, so the credit bureau, the credit report itself, it should not give certain information. Certain information should not be included in it, such as, your race and those kind of things.
Excellent.
So let me see what else the credit bureau should say. I know the banks or the insurance companies, they shouldn't provide any information if the information is not reliable. So that means that they cannot give misinformation.
Oh, that's cool.
Ms. Archer, I had a random, not very random, but unrelated question concerning the exam. Is it an all-day type of thing where we, have access to it at a certain time and then turn it in at a certain time?
What do you mean, the credit report?
No, I said it's kind of unrelated regarding the exam.
What would you wanted to know?
Is it an all-day thing where we?
No, 3 hours.
3 hours, okay.
How you get to the exam?
I know, that's why I tell you it's unrelated. My brain just went there and I was like, let me ask this before I forget. Thank you.
Yeah, 3 hours.
Okay.
You have 3 hours and they're all scenario questions, no multiple choice, no fill in the blanks.
And you said it could be on all these cases, would we have to be reading too?
No, it won't be on all. On the last step class, I tell you what's on the exam.
Okay.
You said no multiple choice and no fill in the blanks, you said?
Yes.
You said there's no multiple choice, you say?
No multiple choice, no fill in the blanks.
Jesus. Okay.
Powerful.
What happened? It's about application. It's the same way like how we're having the discussion and you're asking the questions. It's the same way. It's all about application. You would like to have multiple choices? Really? Time to speak up.
No.
Yes.
Who's saying yes? I think based on the discussions and based on the cases, you have an idea of what happens when people get a mortgage. You know the bank is coming for vacant possession. And then there are also some legal terms that you need to know. And further down, we're going to talk about credit risk itself. But I don't think the topic is suited towards multiple choice. But would you like to have some multiple choice? I heard yes, I heard no.
Are we gonna have a review then?
A review.
Like
no. I tell you what's coming on the exam.
Practice test?
That's what I'm saying. Like, just throw some.
Oh, you want a practice test? So no. What you want is a past exam question.
Yeah, that's what I mean. I mean, how else am I gonna perfect my answer if I don't know how and what to look for?
Okay. Well, last day I could give you all one. If you want one before, then I could send one tonight.
No, not
Maybe you could do
it. I'll take whatever I could get.
Where you show us what an ideal answer would have looked like.
Oh no.
I'll take that too. I'll take.
Yeah, like a little format of how you would like a question answered. So is it like
right? I can give you a question. You can attempt it, and when we come to next class, I'll tell you I'll look at what you send me, and then I'll tell you what an answer would look like.
Okay.
Okay, that sounds good.
I can live with that.
Yeah.
Okay.
We can try that.
Good.
Are we all gonna get the same question?
You want to say what? No, you won't get the same one in the exam.
No, she means if we're all gonna get the same practice question.
Yeah. Yes.
Okay.
I'll send one question out and have a look at it, answer it. See if you could answer it without the book. Don't use the book.
Glory.
No, do it as if it was an exam question.
And if you send it out, please tell Miguel don't send it on Thursday, okay?
Yeah, you know. He can hear you.
Yeah, well, you know how I go. Just tell him don't send it on Thursday.
He can hear you very well. I'll send it right after class. I'll send it to him, let him send it out.
But so I guess with the exam, it's going to be related to the case studies and then also the book. At least the majority would be from the book, I would assume.
It will all be from the book. But the scenarios could come from anywhere. It could come from the book. It could come from the cases. But how you answer it, you'll see when I send it.
Okay.
So don't panic yet. I don't know how you all get to the exam. How many more weeks we have?
We're more than halfway through.
Oh, you're way past halfway. You're almost 3/4 way through.
Yeah, that's why we're nervous. We need to see what we're up against.
Oh, it's not that bad. It's not.
I had Miss Archer before. It's that bad.
I know, right?
I had a feeling. I said, boy, I don't know.
No, it's not that bad. Don't listen to them.
And what's the passing grade again? You said 70%?
70.
70.
Mm-hmm. And not easy to get. I hear nothing.
But the legal grading scale, it's not 70%, by the way.
What you mean on a legal grading? There is no legal grading scale. Oh, why do I get this feeling you all are getting nervous?
I am.
You are good and things.
Yeah, you are well connected to us.
No, man. We were having so much fun until you all come asking this question about exams.
Sometimes when reading some of these cases, I just have to have my mood in there.
Yeah, but I thought you all love these questions and these cases. Y'all were having so much fun.
Sweet fun.
Ms. Archer, I can be honest with you. Unless you have a legal mind to sit down and read these legal cases, some of them, the wording sometimes trips you up and, gets sort of confusion.
Oh my God.
So.
I thought it was only me.
I totally agree with you. I totally agree.
Yeah,
I thought it was only
difficult
me.
for me at first.
I thought it was only me too.
Yes, I have to agree.
Okay.
So I don't want you to feel no way about it. It's just the fact that at the end of the day, the cases themselves, unless it coming outright and saying A, B, C, D, E, and it's like what Hilton used to do. he used to go one way in order to get to the next, to get somewhere just to prove a point, what was down there and eat. So it'd be all over the place. So that's what the problem is with the legal wording in connection with it. So unless you have the legal mind to say, hey, look, yeah, you can dissect it, we can have a problem.
Okay. All right. So let me give you I'll just read to you a 4 points now question. Listen it.
Mhm.
Your cousin wants to visit his banker to seek additional funding to carry out repairs to his home. His existing mortgage was executed on 11th of January, 2011. And as far as he is aware, his payments are current. Explain the following to him: equity of redemption, definition of a mortgage, certificate of stamping. 4 points.
What's equity redemption again?
Oh, Lord.
And but you said you're gonna tell us what's gonna be on the exam, because we're gonna need to know these things to.
Yes.
Like to know what equity of redemption is, by the way.
Yes. So that's a very easy question.
And certificate of upstamping?
Yes.
Yes.
What happened again? Okay, let me give you a 20-point question. You want to hear what that is about?
Yes, ma'am. Go right ahead.
Okay. By way of a legal mortgage dated the 26th of March, 2015, the mortgagors charged their home as security to the bank in respect of all present, future, actual, and or contingent liabilities owed by a company to the bank. Clause 11 of the mortgage agreement provided that the mortgagors were deemed to stand charged with the liabilities secured, quote, as if they were primarily due from the mortgagor, end quote. In January 2018, the bank issued proceedings seeking possession of the mortgage property. Decided cases have established that the bank's claim is one simply for possession, not payment. Simply restating that the general rule established by long-standing authority is that, except insofar as his rights are limited by contract or statute, a mortgagee, by way of legal charge, is entitled to seek possession of the mortgage property at any time after the mortgage is executed. Discuss.
I have a question though. How
Go
could
ahead.
it be? How could it be the banks for them to repossess at any time after it's executed? It has to be. They have to give them a reason why, right? It has to be for them to execute it. They just can't say, okay, I can give you the mortgage, I can give you a loan, hole in your house. The company, sorry, I'm going to give your company a loan, hole in your personal possession, which is the house, as security, if the company doesn't go in default.
That's why I call a discussion.
All right, because that's what I'm thinking right now. Because in a way, you could tell me you could just take the house after you give me the mortgage, and I get
Right. But that is the way that is where you will conclude. First, you have to explain that logic first as to when the bank can actually take possession.
That's where the discussion comes in.
Okay. No, I got you.
Yes.
I got you. I just was trying to figure it out.
Which cases would you use?
Right, that's what I want. I have a question. So with this type of thing, would you say yes, the bank does have an entitlement?
Never answer yes.
Okay, so the bank does have some type of right to, possess that property that was mortgaged if there was a default that occurred and if they followed certain legislation, like, because they have the Homeowners Protection Act where they have to give the demand letter 30 days after the demand letter, then they could start and initiate stuff. Do you also call on case law to be like, however, they need to watch out for this, that, and the next?
Yes.
See, go ahead. But my question to that is, now the Homeowners Protection Act, you're saying this is just for argument's sake now. You're using the Homeowners Protection Act as something else right now. But I don't think it should be in the same category based on the fact that they literally said they're putting their home up as collateral against the company's business investment. So I'm not certain the home. I see, and that's the thing right there.
So it's not necessarily okay. Yeah.
Not necessary, exactly. But
Right.
it's how you set out your answer.
Mhm.
You have to think. Okay, when we do the review for the exam, and I give you your clues, I will say there's a question with regard to when can the bank seek vacant possession, and it depends on which case or cases I have drawn from for my question. I will give you a list of the cases that I have used to write the exam.
So that's why you need to know the cases, I guess.
That's what cases. Right now, you're only just reading them. At the end of the day, I will tell you which ones the exams are prefaced upon.
Okay, I think that was the issue for some of the legal minds too. Is I think like when we go over them and the different modules, like the main issue is slightly off from the issue that the module is dealing with. So you don't usually know, like, hey, this looks like the main issue to us, but then, you know, the module is about something else. So that's the difficulty with the cases, at least for me, for certain, and at least one other person I spoke with.
Yeah, because what I try to do is try to give, even though in the manual I give you a lot of some Bahamian, but most of them are English cases. I try to use as many local cases as I can to bring it home. So sometimes, no, they don't align with the chapter. But at the end of the day, it's all about mortgages.
Yeah, because I would actually listen to that question that you just mentioned just now. The first one my mind would have run on was the Junkanoo Beach. Well,
you would have gotten your 20 points.
Wow.
That is the case. And I know you read it because remember you contributed towards it when we were discussing it.
Yes, ma'am.
That's what I keep saying is if you read the cases, you don't have to remember the whole name. You could just remember Junkanoo. You just could remember Chisholm. You just could, okay, let me give you this one. Let me see if anyone could remember this one. Because I'm going to give you the name of the case now. And this question was worth 5 points. In the matter of the petition of Rodin, the court discussed the steps it will pursue when there are competing documentary titles to the land. Explain the steps taken to grant good title. 5 points. Who laughed?
That was me. That's what we just did last class.
That sound like Munnings and how many homes?
Yeah.
You could use that one, yes. What else could you use?
And acquired an action with Rodin or something?
Yes.
Okay.
So there's 2 cases right there you remember when there are competing titles.
So that's why I need my listing to go through my cases.
They sent it to you.
He said, okay, so you should have it.
Check on the 15th. Check on the 15th. Check on Thursday, Kenny.
Nah, don't try that. Don't try that.
Check on Thursday, Kenny.
When I come off this call, I will speak to Mr. Pratt.
I heard him ask you to put something
So you see now why I say start to read your cases. So no, they won't align exactly with the chapter, but they all are mastering mortgages. This is very difficult to find an exact case that match with the chapter.
Yes, ma'am.
But at the end of the day, it's all about mastering mortgages. So everyone has access to the Credit Bureau Act and its regulation?
No, ma'am, I don't.
Do I
don't. Yes, please.
Okay, I will.
That reminds me, you were supposed to send me the one with the bank teller, I think last week.
Send that out.
Oh, well, I didn't get, I got to check. I got to check on the 15th again then, just to see.
I sent out both.
I got the listing, but I didn't get the actual, I still need Albany. I haven't found that one yet.
Albany. Yeah, I think I saw something in an email saying you asking for Albany. What Albany?
You have a case named Albany or something?
I think that's 3 chapters back. Did you get the McCushla case? McCushla versus
I got the name, but I haven't gotten the actual cases yet.
I got that case, but I read it before I got it.
Oh, okay.
And she's talking about the Albany case study. I think I got that on the 14th.
You know, I sent these things out.
Check the email again.
Yeah, can you send it to her? But you got the 2 McCushlas? McCushla versus SPL and SPL versus McCushla?
I'm trying to remember. I'm not sure. Okay.
I'll send it again. I have both. I'll send it again.
Send it to me, please. So.
But the one I got was long.
Both are long.
Okay. I think that was the one with the Scotia.
Yeah, one is she sued Scotia, and then on the Court of Appeal they overturned it.
Okay. That's for the withdrawals when she said she was off the island.
Yes. Yes.
And failed to report her card missing.
Yes, because she said her account was used for savings and she had no need to withdraw funds. And when she went to the check account, she saw that $27,000 was missing on 2 different occasions. Okay, so the only thing other than that in this chapter is just this table. I never examine you on this table, but you could have a look at the table. You all are getting a little scared for the exam. I don't know why. I don't know.
I about to start reading these cases.
Yes. And you and I have already spoken.
Yes, ma'am.
Yes. So Kwame, hopefully I might get the listing tomorrow. I mean tonight. Because the last one I got, like you said, Thursday.
Will you all stop?
I was the one who brought it to his attention. Kwame was supposed to be sent up for Monday. We're just getting it now.
Okay. So let me see what I have to send you. McCushla versus SPL and SPL versus McCushla, correct?
Correct.
Yes, ma'am.
The list of cases.
Yes, ma'am.
So
That's the most important.
Okay.
That would include McCushla, right? The list of cases.
Yes.
Okay, beautiful.
Yes.
So that's all I need then, the list of cases.
Okay.
And Albany for Siobhan, please.
You sure you don't have that? I know I sent that out.
Okay, let me see.
Yeah, I have that one. I have that take off.
Kenny, check on Thursday, and because I sure Miguel sent it on Thursday, the list. I'm certain that he sent it. When you brought it to my attention, that's the only thing that I got from him on Thursday, and that was the list.
Yeah, I got a list, but the actual case I can't find Albany.
Oh, okay. I'm sure I thought I saw Albany. Okay.
So, Ms. Asher, the list, what you said is the cases put on that particular list, is that what's going to be on the actual exam?
No.
Those cases?
No. It could be those and it can be others.
Okay.
As I told you, I will tell you. I can get another case that is very similar to the Munnings case. But you can use your Munnings as your example when you respond. Because a mortgage is a mortgage. Obtaining good title is obtaining good title.
So you're just saying the actual fact pattern may not be the same, but the application
Exactly.
will be the case. Yeah. Okay.
Yes. And then you have some more cases to come. So that's why you need to read them. And then you'll see, after you begin to read them, you begin to see there's a pattern in all of them. The judges don't deter from what are the leading cases in certain matters. So that's why I said last week, start to read, because as you begin to get more cases now, I don't want you to feel overburdened by saying it's just too many.
Was it Gabrielle who said she didn't get the Albany?
No, I
That
got
was
it.
Siobhan.
Oh, Siobhan.
Siobhan.
Okay.
Yes.
You found it?
I was checking to see who received it.
So now you have an idea of what the questions look like. Oh, I was supposed to send you the credit reporting act and regulation. Yeah, okay. So, and then look out for some more cases this week. Okay, so that's 4 things I have to send.
Are you sending the cases this week?
Call me behave.
Now listen here. Mr. Pratt always does a good job, you know. No, guess what? If everybody received the email today, did everyone receive it with the link for the class tonight?
Yeah.
Because I could just do a reply
Yes,
all.
ma'am. Yes, ma'am.
I could do a reply all and put these 4 documents in it.
That works.
Okay, all right then. Look out for it.
Satisfied, Kwame?
Yeah, I hear nothing. I'm
Boy,
going to get.
Yes, I am.
Okay, so I'm going to get started right now. That's it. Now I have another question for you all. Did you receive in the first class or the second class, did you receive from Mr. Pratt a set of precedents?
For me, no. I wasn't in the first and second class. I came in on the third one.
Okay, did anyone get any precedents? That would be
No.
for the next chapter.
No, I
No,
didn't get any
that's what I was
precedent.
gonna ask. Oh, sorry, Ms.
No?
Gibson.
Okay, so let me tell him, no, he didn't. Okay. Precedents. Okay, all right. Okay, so let me work on sending these to you. And then what I will do later this week, I will also send you the cases for next class going forward. I'll do a reply all again.
Thank you.
Use the same list of names. Okay?
Yes, ma'am.
So those who haven't started to read and those who have difficulty reading, as we end early in the night, since your time is already allotted, like I was telling you to do, start to read your cases. Just to get familiar with the facts, and then you begin to see there's a pattern in how the judges handle the questions and the issues that are before them. And if there's any case that's referred to that you would like to read, you could let me know. Any of the ones that they refer to where they just took maybe just an excerpt, but you want to actually read it in full, you could let me know. So it's not for you to memorize them verbatim, just to be familiar with them. So you could take each one and you could like put on it adverse possession. If there's a particular section you want to remember, or getting to root title and put your cases and put your little notes on the side. I don't mark hard if you forgot the name of it, long as you remember something about the case. Do you still want me to send you all a question?
Yes, please.
Okay.
Of course we do.
Yes, please.
Yes.
Yes,
Because
ma'am.
if we just have an exam tonight.
You want me to send you one of those that we mentioned already?
No, a
Of
little
course
new
we do.
one. A little new one and the one you sent.
Okay, all right.
Like a 20.1, please.
Okay, a
Thank
20
you
point
so
and then
much.
a 10 point.
Yes, thank you. We are
Yes.
so grateful.
Okay, I'll do that.
As many as your heart leads you to send, Miss Asha.
Yeah.
Yes, please.
I don't know why y'all going with the many.
And we
Y'all have plenty of
appreciate
work to
you.
do. 20 point and a 10 point. Okay.
4.2.
All right.
4.2.
No, the 10 points are 6 and 4.
Oh, okay then.
Yeah, I mean, I have some whole 10 points, but, and then I have some that are broken up into small points. So, okay. All right. Well,
Janine,
you could get
Janine
yourself
is
a
in
cup
the-
of tea.
Miss Archer,
ahead.
Janine is in the chat. She says her mic isn't working.
Oh, okay. I see you. I see you there. All right. So what y'all can do is get a cup of tea, stand by your computer because I'll send the questions first. And then I'll send the cases.
Okay.
Sounds good? And then I'll send a credit report. Because you really should get familiar with it. I think I'll put it on the exam.
Yes, ma'am. Thank you very much for sending that.
Yes, I'm going to send it. All right. So have a good evening.
Put it on the,
Go ahead.
Exam. I said,
Credit.
don't put it on the exam.
Why not?
Go ahead,
It's a good
Natasha.
thing. It's a good thing to put it on the exam. It
If you
forces
was
you to
having
read
an
it.
exam tonight, I would
No.
have failed.
That is why I decided to get you prepared from last class. Did I not say get ready?
I've been studying, reading at
Okay,
least.
all right. Okay, all right. So let me get started. I'll send the question first, and then I will send the two, the credit report, the act and the regulations, and then I'll send you the two SPL and PINDA case.
Okay. And send Albany for me too, please.
Oh yeah, Albany, I gotta look to see where that is. Albany. That's Siobhan. Okay. And then I'll ask Miguel to send you all the precedents for next class. And I have to send you some cases. There's a lot.
Yes.
No, not for you all, for me. Not for you all. Okay, we're good to go. All right, let me get started. Have a good weekend. It's raining now. Please don't fall asleep.
Thank you.
Start
Good night.
studying. Good night. Good night.
Thank you. Good night.
Good night.
Good night.
Good night. I'm at my computer, so look out for my emails.
Okay.
And it's not raining by me.
It's not?
Nope. Hasn't rained all day.
You got to be joking.
Nope.
Boy. Well, I thank for my blessings because my orange trees are growing. You need it. War is coming.
Okay, good night.
Good night. Good night.
Bye.